Hello, hello. Doc here from North America. Good morning, good afternoon, and good evening. Another fun-filled day. Today is Tuesday, of course, and it's the second day of the week, and we are, or the third day of the week. I don't know how you calculate it. I guess Sunday, Monday, Tuesday. And so what you got going on here is you can see the dollar index up on the right side of the screen showing firmness. You can see dollar index on the left side of the screen showing firmness. See that? A green hinky on the J4X. You see the green line moving up on the right here. The green line advancing past the dash line and at the low end of the range. So they're doing a little buying in here, with the dollar again, back to the dollar again. They just buy, buy, buy. And, just same game, different day. That's about it. And what we're seeing now is the strength. I did see this morning when we sent out to the clients, I did see the euro was minus. I think the cable might have been plus, though. So we're seeing some mixes and combinations. Janos, hey, how you doing? Frenzel, hi, how are you today? We're doing good here. A little overcast, nice and warm. We were up in the 40s, around 40 Celsius, 42 Celsius. It was nice and hot and toasty. We've had some nice fresh rain, so things are good. Plants are happy. Farm is looking good. All good here. And you can see actually the grains have been lifting. I guess there was a rocket fired at, or rockets were fired at Odessa. I don't know. They thought they had a deal that they could export the grains out of Odessa in Ukraine, and everything looked like it was a deal. And then obviously it's fallen apart. Someone keeps on. First the Russians claim they're not shooting them, and then second they're saying we don't know. We don't know. We're not sure. But anyway, that's the market starting off today, and you can see the stock indices are kind of quiet. They're down about 113 points on the Dow. So it's not like the world's falling apart in any way. Unless we're up or down 300 points, it's just noise at this point. And what do we have here? Let's jump over to. Let's take a look at the individual currencies. And if anybody would like to see anything, just put it up on the chat line, and we'll go take a look at it. We're going to take a look at the euro to start off with. And there's the euro right there on J4X. You see that little weakness right there. And right there. Yeah, pressure's on again. So it's going in and out, and now it's just down. And you can see on our work here on the right screen, that pink line represents where we went into a weekly sell signal of our work. And it's going on for 3, 4, 5. This is the 6th week now. We're still in a sell. It just keeps on pushing, and you can see how markets kind of ebb and flow. And the end result is that normally they just slide up and down. Money comes in, goes out. There's always that shifting that's going on. In other words, you got to take some profits. You got to dollar cost average in. It's a combination of both. So there's always buying, there's always selling. And that's how markets function. Unfortunately, some people think that in the marketplace in particular, they think that things move in a straight line and they don't protect themselves enough. But here with the math, you can see we have two tools here, the J4X on the left and our Chicago Quant Technologies on the right. Watching the Chicago Quants confirm how accurate the J4X is using the tools that we've developed for it. So you can see there the euro is also playing with the top end of the range. So I guess I kind of doubt we're going to see this much of a slide. That was a pretty big slide, coming down from the 106 down to 99 and change. But, no, we're in a weekly sell over here, as you can see. So as long as we're in that weekly sell, now I'm not sure why that's there. Okay, that's a buy. That's what that was. So we can fix that. Take that out like that. There we are. So I guess we were. How does that work? Where's the sell here? So it must have been a buy, and then I guess it bounced off it. And did it bounce off it? It doesn't look like it there. It looks like that's a minus. I'm not sure why that's missing the line. Let's put that line in there again. Pink. Whoa, not that pink. Let's do it from here. And you can see it's vacillated back and forth a few times now. The euro, it's gone into a buy, it's gone into a sell, going back into a buy again. You see right there. What we do is, for those that are new here, when the weekly buy is in a buy and you get a daily buy, that's usually like there. It's a little bit safer of a trade. It's about an 85% accuracy rate, and you can see how this. Once it went into the buy, it did find a way to go higher at one point, and then you can see here it goes right into the sell the next day, so it tells you to stand neutral. Then it's in a sell, goes into a weekly sell, and you can see it collapses here, and there's your weekly sell confirmed there. And then it jumps right back into a buy again on a weekly basis. You can see the strength kicks out, and we're in a daily buy, so it tells you to be long. And then when it goes into a sell, it tells you again there's a daily sell. As long as the daily and the weekly are matched together, you trade them. And unless you're using option derivatives. The option derivatives and binaries allow you to put on positions a little bit more aggressive, I guess you could say. Not riskier, they're less riskier and more aggressive, I guess you could say it that way. And so that's the way we look at it. If you're just trading the spot, then follow these rules, and more than likely you will be a winner. 8.5 out of 10 times it does that. All right, from there, and good money management, as Robin would say. And from there, you can see today we are flirting with the sell, and at the same time we are in a weekly sell, and so maybe they will go challenge the par again. Was impressed with it before, and they challenged the par. I mean, we've had people around here like Jordan and bunches of others, 47 come out there. They've been looking for a par in the euro against the dollar for years now, and it happened, and I was glad that we were in a weekly and daily sell for it. So the math caught it just perfectly, just scrumptiously, yummy. So, and it's still not letting go. That's the curious thing. So we thought to some extent this was like a dead cat bounce. I was impressed that it got up to the 02s. That's like a 1/3 or almost a 50% retracement back when you pay attention to Fibonacci. And we do watch the Fibonacci sequence. Our math is what we refer to as a pre to the Fibonacci. We notice that our math tells you something, and then the Fibonacci sequence occurs a little afterwards, and it confirms it. And so we always say that our math is a prelude to the Fibonacci mathematical characteristics. So there we go. From there, let's check out the GBP, the Great British Pound, and see what's going on there. And you can see it was not in a sell the last couple of days, and now it is. It's trying to play into the sell also. Now this product has been in a weekly sell all the way back to April. So we've gone a good solid 3 months in the weekly sell, and each daily sell has been pretty good, scrumptious. This one was a very poor one right there. That's probably the worst of them. And when we look at this over that time period, like there was the first sell, that was a nice win. There was a second one, that was a nice win. The third one, scroll over to it so we can see it, was fair at best, maybe even gave up a teeny little profit to the other two. But then, of course, 8.5 out of 10, so there you go again, a win, and that's what you're looking at basically, a win, and what it really comes down to, there was another one there, a win. How come we didn't get the red in there? Let's fix that. So what it really comes down to is what you're looking at here is when you're following the J4X and then you're following the Chicago Quant, it will give you a good, solid opinion, a healthy opinion of the direction overall. And that's what you're always, the trend is your friend, traders. The trend is your friend, and you want to try to stay with the trend. And that's what we do here is we discuss it, we kick it around, we check the tires, we're always looking at it. We're not afraid to show losses because that's just part of trading. 8.5 out of 10 means 1.5 possible losses out of 10. So, and that's putting the trend as your friend on the side of things. And so here it is, the cable. Now, what did I see? I saw something this morning with Britain. I think they're getting energy from Norway, but the prices went up 5,000%. There's some really strange stories out there. Oh my God, 5,000%. Let me find that story. It was like 5,000%. How does the energy go up 5,000%? Can't they just drill this stuff out of the ground? What's the problem there? Everybody's got land, so there's got to be energy. I mean, even if it's just nuclear power, it's pretty easy to do. Geez, nuclear power is so safe and easy to do anymore. I'm not even sure what's up with the Japanese and their issues, but using old concepts is not the way. I mean, the modern reactors today are just fantastic. Very safe. Let's see. Let me see, find that story. It was 5,000%. It's like 5,000%. How do you get 5,000? No recession, all of a sudden yield spreads are collapsing. Let's see. Here comes the earnings barrage. Yes. I know General Electric was bad. Fed will ease back. Let's see. I should have saved that one. The one I did save was the Chinese one. I thought that was fast. Here it is. London price spikes 5,000. Let's put that up there. There it is right there. It's on zero hedge. London power prices spike 5,000. Relies on Belgium to thwart rolling blackouts. London power grid was pushed to the brink of failure following last week's heat wave. Wow. I mean, I just don't understand any of this stuff. I mean, it just blows my mind. There we go. So, yeah, I'm surprised with 5,000% increase. No wonder that the currency's in a weekly sell forever and ever, or at least a full quarter now, over 3 months, April and May and June and July, and next week is August. That's like wow. But at the same time, it's been one slow drift. From the 130s down into the 117s, 18s, something like that. What was the low there? 117.60. So it's just been a slow, steady drift in the cable. What do we got here? Hello, how did I save the template in J4X? Here, I'll show you the internal tools. Let's see. So the red and green hinky ash keys. It's a edit indicator right there. You can see that's their hinky ash keys. Whoop. Right there. See it right at the top? It says HEIKN or INASHI. Hinky ASCII bars. That's a good tool. When it's red and the green line is underneath the dashed line. Now let me just show you what they are. Edit indicators. There they are. The yellow is the fast stochastic, and we're following the 5-3. And the SMA, and then let's see, output levels, advance, yeah, right there. Okay, so, and you can see here on the slow D period, it's a 3, and we're looking at, on the price type, we're looking at the high and the low. Now over on the let's see, let's go on to the next one. Indicator, edit indicator again, and this one is, did we get that one? That was the slow, I'm sorry, that was the slow stochastic I just showed you. Let me just show it to you again. Edit indicator, that's the stochastic, and that's the slow stochastic, okay? That's the yellow. That's what we're looking at there. That's the yellow, okay? And then we go to the green. That's the fast stochastic. You just double check it. Yep, right there. And you can see there that's a 5-3 in the periods of the fast and the fast and the K and the D, like it was the same with the yellow one. And this one in the fast, we're just, excuse me, we're following the SMA, and the width is 3. And let's see what else is there. That's about it. And show the indicator on all periods. Now let's go back to the slow again. Excuse me. We'll go through the same character math. And so same situation: the 5 and the 3 for the K and the fast K and the slow K. And then outputs, it's the same thing. The width is 3, and the levels in this case here is a 20 and 80. And let's see, and then last but not least, the advance is showing on all indicators. Let's see, something's saying. Roku. And so, let's see. So Frenzel says you can save the template of the whole workspace on the top program window, right from the little house icon. Oh, good. Thank you, Frenzel. Yeah, sometimes those things skip by my little brain. I hear you. The chart template can be saved by a right-click on the tablet type chart. Cool. Okay. So you're talking about, let's see, let's make it big, and then we can, let me follow Frenzel's thing. You can save the template of the whole workspace on top of the program window. So here's the program window, and I guess you go to the right from the little house. Let's see, where's the little house? Where's the little house? I like the way you're describing it. Makes it easy for me to learn too. Where's the little house? The little house icon, the chart templates can be saved by right-clicking on the tab title, Chart Window. So, where's the little house at? Normally I do see that little house. Where's that little house? I'm looking for the little house too. I want to save it also. If I right-click it, let's see. Hello from the doc. You are in 4x3, right? I think so. Yes. Let me just double check. File, workspace, reconnect, log out, news. I think it is. Yeah, I think it is 3. I don't know. Actually, I don't know one way or the other. Let's see. Right in J4X4, it's a little icon on the top of the window. Titus. Hey, Titus. The record icon. Let's see. Record icon. It's around patterns. Let's see. Chart layers. Patterns. There must be a save somewhere. Save chart as an image? No. Templates? Maybe it's that. Save template right there. Matter of fact, let's see. We'll call it what I was referring to it as the Manhattan one. Remember? Manhattan. Did I spell that right? No, I did wrong keyboard. Uh-oh. Let me fix that. Let's see. I labeled it as the Manhattan indicator because of the scientist that told me about it a long time ago during World War II. They were using this when Oppenheimer wasn't pushing, let's see, Shift M A N H A T T A N. Indo. I'm just going to label it I-N-D-O. There we go. Yeah, so I refer to it as the Manhattan Indo. What he did is they didn't do it this way. I did it this way. I knew this one physicist who had worked out of Stony Brook, and he told me that in the mornings when they were working on the Manhattan Project, building the nuclear bomb, the neutron bomb, I guess it was like around 10, maybe 11 o'clock Eastern time in New York time, they would send the information over to Stony Brook to run it on a computer that they had there. like the one at the University of Pennsylvania, and like the one that they had at Chicago, underneath the or at the University at Chicago, or it was underneath the football stadium where they did the first. I guess that was the first nuclear critical condition. They tested, making the stuff go critical, start to shed particles. And so he told me that they would use the computer to track stocks and trading and commodities. And then when Oppenheimer would send the information to them, they had to stop. And he started yelling at them to stop using the machine to trade the market. So in the 1940s, they were trying to trade the market with a big mainframe computer. So I refer to this as the Manhattan indicator, because it's not exactly what they were using stochastics, and they were using RSI, and they were using moving averages, and they were doing all kinds of stuff. They didn't do it the way we do it here on J4X, but they were playing with these tools. And so Hinky-Ashkeys, I don't think, were developed at that point. They were using a moving average on the bars instead. So using the Hinky-Ashkeys emulates the moving average on the bars. And then using a fast stochastic against a slow stochastic is a very sophisticated, as far as I'm concerned, a more accurate way than compared to, say, using a MACD. So that's the game that was going on there. Let's see. Let's make that back to normal size. And why did I lose my chat line? Where did my chat line go? Let me just recycle this thing. I lost my chat line there for a second. Here it comes. Now, why can't I see my chat line? Chat line. I did something wrong. If I close this, I'm going to start over again. That's all. I started to type in the wrong spot, and the next thing I lost my chat line. There we go. Got my chat line back now. Templates. Thank you, Frunzel, for helping out. I appreciate that. Titus says record icon. Exactly. Or right-click on the chart title, right? Tab, and then you can clone a chart and all its contents. Perfect. I bet it was huge nuclear bomb full of SUVs. Yeah, it's wrecking the whole solar system. Those SUVs, oh my God, they're wrecking. Pluto's lost a third of its atmosphere over the last 5 years now almost. I mean, 2 new ice ages have developed on Uranus and in Neptune out of nowhere over the last 3 years. We've got, Jupiter and Saturn, or Saturn and Jupiter. We're going in rhythm there. Same issues. The winds have shifted dramatically in the reverse direction, and they're in some parts, and they're just messing with everything in sight. And now Mars is having all those giant earthquakes. So yes, those SUVs are wrecking the whole solar system. Yeah, I saw somebody today took apart that ozone thing with an Al Gore video from back in the 90s, and he was telling us that we were all going to be dead by like 2001 or something like that. The ozone we've dropped the pollutants, and the ozone hole gets bigger. So I guess we should be polluting the earth and protecting the earth, and more fossil fuels, and everybody would be able to heat their houses, so much cheaper. So yeah, it's crazy stuff. Yeah, really. How come the ozone hole keeps on getting bigger, and we keep on dropping our pollutants down? So something's wrong there. It's stop the pollutants. In other words, stopping the pollutants. In other words, increase your pollutants and everything will be fine. I think that's how it's supposed to work. So anyway, that's where we are. We're looking at that indicator. It follows our mathematics about 68 to 72%. It depends. But overall, it's around 68, 69, 70% accurate to our math. It follows it. It's just a lag most of the time at this point. Ours is a couple hours faster, that's all. So that's why we show you the two. It emulates it, so forth. And then my math, with these lines, like this one's the Bollinger Band right there, just shows you my math compared to Bollinger Band, how much more accurate our math is than the Bollinger Band, the one standard deviation. Down here at the bottom, doing the same thing. This is a weekly, whereas these are the dailies right there. That's a daily chart and daily Bollinger, and this is a daily chart and daily Bollinger of the math. So, let's see. I wonder why we build greenhouses when we have such high CO2 levels. Must have something to do with the SUVs. I just know that those SUVs are wrecking the solar system. Isn't it amazing? Maybe that's why the stock is down today. General Motors is down, so they build lots of SUVs. Greenhouse. I have a greenhouse, but we use it to party in. So it's kind of fun. You know, we have big dinners where you can have 50, 60 people in it, and big giant tables. And let me see if I can find a picture of the greenhouse. I'll show you my greenhouse. It's a lot of fun. Greenhouses are fun, especially in the wintertime. Let's see. Let me see. I think we have some pictures of the greenhouse somewhere along the line. It's around here somewhere. Let's see. I guess we'll go like this way instead then. We will go up to there. Is it in Messenger? Maybe it's in Messenger. Yeah, we'll get there. We'll find you a picture of the greenhouse. And greenhouses are... Also, it's nice to start the plants off in the spring, you know? Especially February, March. That's always nice. That always helps a lot to have the the plants in the greenhouse, and then you get the plants started early, and then you bring them out to the field. That's a good thing, too. So, but we have lots of parties in ours. Why can't I find the pictures of the greenhouse? Oh, I know where there's pictures of the greenhouse. I'll find it in a second. And let's see. Rag and bones, that's it. We'll find it in a second. Bones, that's where it's at. Rag and bones. That's not it. Rag and bones. Anyhow, yes. All right, so I'll find it while I'm going through other stuff. We'll find it, I promise, and show you the greenhouse. It's a lot of fun. It's a blast. Let's see. So from there, let's go over to, where do we go from there? We usually go to the. Let's see. We did the Cape. Oh, let's take a look at the Swiss real quick. Unless someone wants to see anything particular, we can go tune it in, and let's find the Swiss. Right there. There we are. And let's put it up on J4X too. And there's cable. That's what we were just looking at. See how it's curving just like ours was going down too. And then let's show you Swiss. Right. That's not it. Yeah, that's it right there. No, that's not it. Right there. There's Swiss. Pressure's on. You can see we're in a daily sell from there. It's in a weekly sell. Look at it. It's challenging the weekly buy today. There's putting some pressure on it on the upside there. Whoa, not there. There we go. So what's really happening is that we seem to be pushing, at this point in time, we keep on pushing in a lot of different directions in the sense of the currency pairs themselves are weakening again to the marketplace. You know, in other words, King Dollar is being King Dollar. That's pretty much what it comes down to, and it doesn't seem to want to stop, and it doesn't. It just keeps on pushing, and you know, you see the little bounces here and there, but overall, nah, it really doesn't stop. It just keeps on. The strength of it just keeps on pressing, and all we see is the dollar holding on. You know, I mean, interest rates are really at a high rate at the moment, and we keep on thinking that we're going to, you know, see interest rates. You know, I don't know. The dollar is at a high rate, and then you think, okay, well, maybe they will back it off and the dollar won't be so strong anymore, but it doesn't seem to stop. It just, you know, it just keeps on pressing. You know, we just keep on getting that force of nature of it all. The dollar is, it's a combination. It's a place where it has a return. Right now, you can see, we can put up the bonds across the planet, and unfortunately, the U.S. produces, its bonds pay more than everybody else, and not counting the fact that you can get in and out of billions of dollars relatively easy in the same situation there. So when you put the two together, it really does make it one of the only places that you want to go to, if you want to park money. That's why when we look at the Turkish lira, we see it in the euro Turkish lira. You can see it trades more like a currency. When you look at the dollar Turkish lira, it trades more like an index. And so, it's basically the only place to go when you have large sums of money, to run to, really. That's what it really comes down to in the end result. It's one of the only places to run to, and it's odd, when you really think about it, but that's what it comes down to in the end. And so, you just kind of you shake your head and you go, okay, maybe this is the top of the dollar finally, and then next thing you know, it doesn't. It finds a way to go higher, and they do a little dead cat bounce type stuff, but not really anything that would, basically show us that we're seeing a top in the dollar itself. We're really not. What we're really seeing is, just dead cat bounces, that type of thing, and it just doesn't seem to go away. They just stay. They just stay, and then you keep on watching it, and you think, okay, this is the top, and that's the top, and it never is. It's always the same story. They find a way to stay firm or higher, and that is how the dollar has been for a while now. So let's see. All right. So from there, and there's the Swiss, as you can see. It just, now the Swiss is interesting, and it does breathe pretty well. You can see it's flirting with the weekly buy as we look at it right here. And we'll just make that green like that. There we are. Yeah, it's just a little bit. There's nowhere to go. That's the problem. We have 9%, 10% inflation, and there is nowhere really to run and hide from it. And at the same time, so in other words, they're still buying stocks when you think they shouldn't be buying stocks. They're buying dollars when they're only paying 3% on bonds, and inflation is at 9%. Even we're probably like one of the worst countries in inflation right now. Everybody else is probably like in the 8s and the 7s, But the thing is that there's no better return than ours. That's the problem. And I've heard it said, we're like the cleanest of the dirtiest shirts or something like that. No, yes, that's what it comes down to. There is no real solid place to run to, which is really crazy. You would think the rest of the world would start to go capitalist or something and start thinking, hey, that capitalism seems to make money. But no, they seem to dodge it. They just they end up going in the other direction. They do. They just find a way to, just find something else to do, and the end result they do, and you shake your head at it, and you go like, this makes no sense, but that's the way it goes. And so, for us traders, we watched. Okay, here's a good picture of it. This is before we put some new glass in it. Let's bring that over to you. Right there. Let's see if we can get that. How we can do that. Yeah, there it is. There it is, right there. That was a couple years ago now. Let's see if we can find some other pictures. I think we'll have a picture of it when it's done. I mean, it is done now. We've been having parties in it and so forth. So, in the end result is that it really does amaze me, though, as a trader, not as an American, but as a trader, why the world doesn't do more capitalist things economically. It really doesn't make any sense to me at all. I'm perplexed by it all the time. But in the end result is that that's why we see a dollar that's stronger, and it's the world reserve currency, is because as a trader, if you can't get out, if you can only buy one side and can't get out of the other side, that is not a position you want to be in. And that's what it really comes down to, is that you need liquidity. And when you don't have liquidity, you can't, like when China says they want to be a world reserve currency, they have no liquidity. They only trade 2.5%. They're like the fifth largest economy in the world. European Union is number 2, and it's 21 trillion. And so it makes it tough. It really does. It makes it tough for Americans in many ways, that the amount of what's the word I'm looking for? The amount of money that has to go into the dollar all the time, that disrupts our economy here in a lot of ways. Also makes our politicians enormously irresponsible. It hurts us in so many different ways, and it's like, wow, it just it's unfortunate, just the way it rolls. So anyway, remember, traders, you want to be in liquid products, and you want to be you don't want to buy something that is not liquid, and that's really what it comes down to in the end result. All right, here's a good picture of it right there. There we are. And we were just putting the glass in at that point. Cleaned it all up. And that is the place to party and hang out. I bet there's a couple better pictures. I know I've taken better pictures of it. And what else we got? All right, from there, let's jump over to the dollar Turkish lira, as we talked about, and see what's going on there. No one seems to. Oh, here he goes. There's Franzel. Wonder why we. Let's see. Really nice big greenhouse. Yeah. It's about 130 years old, something like that. I bought it and had it moved there a long time ago. Let's see. Let's take a look at, where's it at? I'm trying to find there it is. U.S. Turkish lira, right there. And you can see it's basically at its highs of these months now, trading at 1787. We've been in that weekly buy forever, ever and ever and ever since February. See it right there. And then when we go over, let's put it up on J4X. I'll tell you, it's interesting. I really do like the Euro Turkish Lira better. The trade. There it is right there. It's been on that mad rampage again. And let's put the Euro Turkish Lira up there. Right there. See, it's close to taking out the highs of a while ago. January. Let's put that up there. Right there. There's the Turkish lira. Now, I think the all-time high is so much higher. So the dollar Turkish lira is getting ready to take out this high right here, whereas the Euro Turkish lira, that's what we're looking at right there, is not. It's not even close. But when we go and do that to the dollar Turkish lira, you'll see that. So again, it acts more like an index than it does a pairs trade, where people are trying to, hedge themselves and buy goods and services and so forth. See that? That's the dollar Turkish lira. It's getting ready to take out that high. It's right there. Yeah, it's a fun greenhouse. It really is, and it's just fun. There we are. We're putting one of the wood burning stoves into it, cleaning it up, and you can see inside is all cleaned up and all the glass is in and the lighting. It's fun. There's a good action picture too, right there. Anyhow, that's where we are. Aragon, is he up for election again? I thought it wasn't until maybe 23 or 24. Is that what it is? I'll tell you, the situation in Turkey is really tough. I mean, the currency's gone from, since Erdogan had become a prime minister of Turkey and then president of it, the currency has gone from 1 to 18 euros. It's gone from 1, no, I'm sorry, 1 to 18 dollars. So it was trading $1 to $1. Now it's 18 Turkish lira to $1. So it's lost like 180%. And then, all right, well more than 180%. What am I saying? You know, it's doubled, it's tripled, quadrupled. And then the Euro Turkish lira has gone from 1 to 18. And I really think, you know, out of all of them, you know, I mean, out of the two pairs trades, obviously the Euro Turkish lira is the better. You know, it's the better product to try to trade. And then, let's see, from there, we go over to the Canadian. Let's see what the Canadian's up to. There it is there. It's a second day in a sell. Right there, it went into a buy for 1 day, back into a sell. It's up, and it's in a weekly sell. So the question is, normally we see, when we see strength like that, in other words, when the Canadian is going down, that's against the dollar. So that means it's making money against the dollar. And normally you go over to the oil contract and it's up. And that's what's going on there. You can see oil lifted yesterday. It's lifting today. Now today it's playing with the daily buy. We've been in a weekly sell since the 115-ish area, 17 area, something like that. And we went down to the 88 area. So it dropped like almost $27 in that weekly sell. And now we're flirting. See, we're not really in the weekly buy yet. We're just flirting. And this is the front month now, the September contract. So I would imagine Aragon, I guess what? Didn't the big cities turn against Aragon? So they elected the opposition. But the country itself has still survived. And so Aragon is still in there. And I guess he'll stay in there for a while. You know, people like that usually is one vote once type of thing. It only happens once after they voted. Okay, so I just had a sip of water there. So now, so you can see oil kind of moving up still more today than yesterday. And the Canadian, let's go back to the Canadian. And you can see there, and let's put Canadian up on the J4X too. Canadian, right there. There we are. You see Canadian's working its way down slowly. The math is trying to turn. You can see that here. The fast stochastics pushing out the slow. There is some buying going on. You can see the same action we've had here, but we got into a buy and it rolled right back into the sell the next day. Let's put that sell in there. And now today it's flirting. It's all zeros at this point. Just trying to, that's actually 0.00016. So it's flirting with a daily buy at the moment, as you can see. Same thing with the weekly, trying to flirt with the weekly buy. Now, if oil keeps on lifting, I would assume we'll see this thing stay in the sell. Now let's jump over to, from there we take a look at the South African Rand, because gold likes to follow the South African Rand. And there are those two currency pairs that have that connection with Canadian with oil and South African Rand with gold. So there's the South African Rand. It's being perked up a little bit here today, which means it's losing value against the dollar, which means more than likely gold is down. So let's check out gold. I don't remember what it was this morning. It's in a buy. I remember that much. Yeah. And it's just down a little bit. Just some pressure in it. And still in the weekly sell, though, since back in the 1850 area. So it's gone from 1850 in that weekly all the way down into 1690. So $160 over that month. Or 4 weeks. 1, 2, let's see, I guess that's the official. 1, 2, 3, 4, 5 full weeks now. Going on a 6th week. We're in a 6th week of it right now. And because we're seeing that, obviously, you know, I mean, we saw the currency. We saw the South African Rand trying to lift back up again after a couple days in a sell. 4 days in a sell. It's still battling with it, but it's in a weekly buy too. So that's a neutral situation. It goes into a daily sell, and you just gotta take your profits. Don't try to get short because you don't know, it might try to turn up, and look, you see there. It's still in a sell lower than where it went in, but I mean higher than where it went. It's making money. That's what it's doing. But again, we're not convinced that this means a lot. The one thing we know for sure is that the metals complex, the physical metals, do not seem to justify the inflation and everything else that's around us. So it's a very confusing thing. You got to wonder. No wonder we're not seeing the price action correctly, because price discovery is all messed up. Also, at the same time, while we're here, I want to remind you on Thursday, and I meant to tell you, Robin. I'll tell you afterwards, but I'll be starting the webinar on Thursday, just Thursday, 3 hours earlier. I will be doing the webinar on Thursday, 3 hours earlier. I'll remind everybody at the end of it too. On Thursday, I have to go out the door around the time I'm starting the webinar on Thursday. So I pushed it back 3 hours. So I'll be starting at 5:30 my time, Eastern Standard Time, 4:30 Robin's time, and depending on where you are on the planet, it'll be 15:30 GMT. I think that's what it is. 15:30 GMT. So, just a reminder, and Giannis will fix the time and show you this. But yeah, we come on now. I think it's 18:30 GMT. I think that's what it is. So it'll be 15:30 GMT, or just 3 hours difference earlier. 3 hours earlier. All right. From there, we jump over to the yen. Let's see what the yen's up to. And there it is there. You can see it's been in that sell from there. Let's put it up on J4X. Right there. See, it's down at the bottom end of its range, just like you see here. See how the green line is way down. It's like just the way it is on J4X, right there. And we're trying to turn up in here. Matter of fact, you can see the J4X has turned, but it's still red, so you have to watch out for that. All those red dots of ours, and the pressure's been down. But we're in that weekly buy. It doesn't seem to want to go away. It went into that weekly buy down in the 126 area, and has run to almost 139, almost 140 from that move. And so we're seeing this product again hanging out in that situation. The yen seems to be really, really clear. We saw this, many months ago when the yen started to break out, in the 113, 114 area. That is the real gist of it all, I guess you could say. That's the real action, is watching the yen against the dollar compared to all the others. And notice that the Swiss, to a great extent, is the same way, but the yen has been even more accurate, definitely more accurate. So, let's see. Doc, can you tell us a bit about the correlations we can look at when trading something like Dow or Forex pairs? Some little tricks. Yeah, that's why I emphasize the Canadian and oil, and I emphasize the South African rand with gold. And when it comes to the dollar, obviously, when the dollar is strong, the metals are weak. Silver and gold and so forth are weak, and when oil is strong, the dollar is strong. And we think, what other tricks? When it comes to the stock indices are, they kind of, to some extent, flirt with the dollar, but not really. The dollar has many forces on it. One force, many influences. There's many little different nuances and influences on the dollar. And the stocks are not necessarily one of them, but the stocks go up a lot because of, in other words, they usually say when the dollar is weak, people buy stocks. And obviously you can tell overall we are down. because the dollar is trading at like all-time high areas. So there are the little nuances of it. Also, NAS CAD used to be a really great one. New Zealand CAD used to be a good tool, watching the Canadian and the oil market in particular. Trying to think what other little tricks. Bonds, that's the problem, is price discovery is not... Right now, price discovery doesn't follow fundamentals anymore. So that's what the problem is. Used to be fundamentals like employment, GDP, gross domestic product, consumer, CPI, consumer price index, PPI, producer price index, inflation, and interest rates. They were great influences. They were the fundamentals. The days of those have kind of drifted. We've kind of drifted away from them, and instead we're kind of locked into this QE thing. Remember, the Federal Reserve now is the buyer of last resort. Back in those days, the way it worked was, the dollar and all currency pairs, and not all currency pairs were as major as they are today. It used to be just the 5 majors or 6 majors, they used to call them, the 6 majors. So it was, the Deutschmark, which turned into the euro in a sense. The French franc was kind of in there at one time. The Swiss franc, the British pound, the Japanese yen. They were the real strong suits, and then it started to drift from there. In the modern era, where they got rid of the Deutschmark, which was the second most powerful, the euro took over that position, which, again, Germany is the strongest state in the Union. And so, which makes the European Union the second largest economy in the world. It's 21 trillion. And so when they say China is the second largest economy in the world, it's not. It's obviously the European Union. And imagine if England was still in there, it would be very close to America, the European Union. In other words, it would be, 23 or 24 trillion, that type of thing. So the different little nuances, that we emphasize a few of them now, but unfortunately the fundamentals have been distorted through quantitative easing. And so that makes it even tougher to follow just the simplest little characteristics. It's the bank's algos that killed the market? No, it's the QE itself. 10 years ago, I remember there were really fine trends in Forex pairs, for example. Today I agree. What it really is, it's the quantitative easing. Because the central banks, now you can trade Aussie like you trade euros and so forth. It's it was always an interesting product. It was right underneath the majors all the time, the Aussie. But now all the minor pairs are much more active because all central banks now support their currency and try to keep everything. The key word here is they want them to be stable. They don't want them to be strong. They don't want them to be weak. They want them to be stable, consistent. Think about the stability of Turkish Lira. Going from 1 to 18 against the dollar, or going to 1 to 21 against the euro. That's not stable. And that's what the objective of the central bank is, to keep the currency stable. And obviously if Aragon was part of the gang, I guess you could say, in some fashion or another, that currency would be more stable. Obviously he's doing things that are against the stability part of it. I hope that answers your question. But it was quantitative easing that did it all, because the central banks, not only the U.S. central bank, but all the other central banks now had to play the buyer of last resort. Remember, in 2008, going into 2009, we lost the financial system. We lost Lloyd's of London, and we lost Merrill Lynch, and we lost Bear Stearns, and we lost Lehman Brothers, and we lost, Wachovia. I think Wachovia was the largest bank in the United States at that point. We lost lots of players in there. Bank of Scotland and Santander, and a lot of them just went out of business. But they're owned now. Citibank in New York is owned basically by the Federal Reserve and still trading at dire prices. Same thing with Deutsche Bank. Deutsche Bank, is trading at dire prices. In other words, bankruptcy prices compared to what it used to trade at. So Citibank, the all-time high now is $667, and it trades at $40 a share. That's it. It's lost 85-90% of its value. Same thing with Deutsche Bank. I'm sorry, Deutsche Bank, same way. And a lot of them, Lloyd's of London, they're all owned by the central banks now, and they hold them up and they prop them up in name only. Do you use COT reports in your analysis? COT. Let me see what COT reports are. I'm a real good data miner, and let me look up COT. I guess that tells you something. What was that? COT reports. Let's see what that says. I just collect the raw data, and commitment of traders. No, I don't. Robin pays attention to them, the open interest and so forth. I don't. I mean, they can be insightful. Robin likes to refer to it as too many fish in the net, like a fisherman fishing with a net. I don't really pay attention to them. I just stay with the math. I am always involved in the math. I stay with the formulas. I follow stories, trying to understand what is the nature of buying and selling at times, and commitment of traders can do that. But remember, you can't look at commitment of traders on the future side, the hard delta, without looking at commitment of traders in the option side, the open interest. So in other words, if you have, let's just put out some fictitious numbers. Let's say you have 100,000 open interest in, say, a product A in the commodities. Well, if you have 100,000 open interest and normally it's only 75,000, then obviously, people are participating even more. Something's coming along. People are getting involved. But at the same time, you've got to follow the open interest on the listed options too of the product, because you don't know if they're creating synthetic positions or and much lower risk and so forth and so on. So, at times before the options market of 1975-76, those numbers were way more important. Obviously, going into 2008, they were, obviously much more insightful. I would say that they are less now. Just a wild guess, Since I don't follow them, I can't really tell you if they are or not. But I would think they're less, because they what's the word I use is that they are basically controlled by the Federal Reserve now. Open interest is, in other words, this will explain what I'm thinking. The Federal Reserve lends funds, hedge funds, mutual funds, retirement funds. They lend them money overnight for free to keep markets firm. And if you invest the way the central bank wants you to invest with the free money, then they lend it to you again the next night and the next night and the next night, and you get free money to make money off of. But if you don't, then they don't lend you money. So markets are influenced by the quantitative easing enormously. And so price discovery has been shattered from that. So commitment of traders, like what's it? Citadel in Chicago, the multi-billion-dollar hedge fund is lent over $1 billion a night for overnight trading for free. So they can open up positions and mess up the open interest, the COT type of stuff, the commitment of traders, very easily, because all they have to do is go in and do some options. You can put a synthetic short on by buying calls and selling the futures contract. That's a synthetic short, and at the same time, that's a straddle. That's an actual straddle. You can go the other way around. You can be buying the puts and buying open interest. Buying the open interest at the same time. That is, again, a straddle. And so when the federal government hands you $1 billion to do something with it every night, you're going to do something. You know, who's going to? I mean, I'm sure if the Fed Reserve called you, Frenzel, or who's that? Alaga, Vayed. Let's go with the first name, Vahid, Vayed. If they called you and said, "Hey, I'll lend you $10 million if you do what we want you to do," wouldn't you take the $10 million for free? You know what I mean? What is economists say when bonds is that the 1 year is bigger than 2 year? Yeah, right now the 3 year. Let's see if we can put that up on the screen. Right now, the 3 year is the 2 year or 3 year is higher. Here, we'll show you in a second. Here we go. We'll put it up on the screen. Where is it at? There it is. And then, is it U.S.? Oh, there it is. I missed it. I went the wrong way. Backspace. Bonds. There we go. Here comes bonds on the screen. So there is the bonds. So there's the yield of the 1 month is 2.17. As you can see, right? Can you see that right there? And you can see the 3 month is 2.5. The 6 month is 2.96. The 1 year is 3. Then you see the 2 year underneath it, so it's inverted, as they would say. So what they're trying to tell you is that interest rates are going to hang out around there for a while, around the 3% area. You can see the 30 year is under 3% now, and the 20 year is at 3.2, and the 10 year is at 2.7. So, and it goes like that, you know, throughout it all. But yeah, the markets are inverted, and that's what that means. It usually happens during recessions. They invert the markets because they're anticipating the end of the recession. That's what they're trying to do there. So that's what that's all about. All right, traders, we're out of here. Tomorrow we'll see you all same time, but on Thursday we will be 3 hours early, just on Thursday. Yep, I'm out of here. I heard the bell too. This is Doc from North America saying thank you for being here, and we will catch you tomorrow. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders.